Well, good evening, students. So today we are going to talk about something very important, which is accounting standard. I'm going to touch upon the aspects which are listed here: international accounting standard, then secondly, international financial recording standards, accounting standards board, then Institute of Certified Accountants of India, and Indian Accounting Standards Ind-AS. A little bit of new terms which has come up here, but before I explain you these things in the subsequent pages, I would like to give you a briefing about it. So when it comes to trade, so trade which may happen between the countries, between two or more countries, or within the countries. So within countries, so if we see here within countries, now when it comes to trade happening within the country, there is some accounting norms which we are supposed to follow. So there is a norm which is, I'll tell you who all authorities who has given guidance on this. When it comes to international trade, trade between two countries, which started long back, but 20th century, particularly in the year 1973, when it was felt that a standard is required to be made with respect to accounting of the transactions in the book of account, and it is required to be presented in the format which is so that it is understandable to everyone, to all the countries, because now the trade is not limited to a particular state. Finances are not limited to a particular country. There are investors who are sitting across, would be investing in our country. We have investors in our country who are willing to invest in other countries. So, what is the parameter? What is the understanding that is required? That is why accounting is called language of business. So, this language should be of such nature that it is understood by everyone. So in 1973, there was International Accounting Standard Committee was set up in order to frame a procedure or process for accounting. So that particular process, which was after having done all the discussions with various enterprises, countries, and their norms, some conclusions have come up and which has been given to which has been framed in a process which is called IFRS, International Financial Recording Standard. Now, what is this International Financial Recording Standard? Why it is stated as standards? Because it has the guidelines of maintaining the books of accounts as per the standards set there, so that it becomes easier for everyone who who is an outsider willing to create a stake in the organization. Then he has to know the language which the organizational report is speaking, and that language, which is accounting, has to be as per the standard, and that standard is set by IFRS. So it is an international standard. Now, what about India then? So India was already having Institute of Chartered Accountant of India. Now there were some practices which were happening. It also made a body which is called Accounting Standard Board in order to have the interactions local here with enterprises, with firms, with government authorities, various. They did all the researches and came up with some solution which was suggested to Institute of Chartered Accountant of India, and it finally reviewed it and took the feedback from the government. It also came up with a standard. Now in India's scenario, it had the option either to go ahead with the international accounting standard or to follow its own, but as per keeping in mind the norms which are there in the international accounting standard. So all these points were kept in mind, what is there in international accounting standard, or IF, as per the newer name is IFRS. Now accordingly, the Institute of Chartered Accountant of India has also framed the standards to be incorporated and given some guidelines who has to incorporate it and to what a level. That is all that has been given to the Indian companies, and who is to abide by it. That norm is also given there, so I will touch upon that a little later. Now Indian Association or Indian Accounting Standards, which has been developed by the board, suggested by the board, and finally it came into practice. So what are their roles, be it at national level, be it at international level, with respect to accounting information or a statement to be presented to the public at large, and the way they can understand if there is similarity in the reports which is maintained at a local level and international level. It becomes easier for them to take decision with regard to developing a stake in the organization. So I hope the accounting standard, the term accounting standard, how it has come up today and being implemented across not only in India but abroad as well, with different names. We will understand them one by one. Now let us see accounting standard overview. So International Accounting Standard Committee, as I said, was set up in 1973. New name, which is International Financial Reporting Board. This board has suggested the norms and accordingly it has been followed. Objective is to formulate and publish in public interest accounting standards to be observed in the presentation of financial statement, and also its worldwide acceptance. Now this is very important, that something that has been framed has global acceptance, worldwide acceptance. Now second objective was to work for the improvement and harmonization of regulation of accounting standards. Now it is first is improvement, because every country was following its own process. So there is that required some improvements. Harmonization of regulation of accounting. So should be syncing of regulation of accounting standards and procedures relating to the presentation of financial statement. So this two objectives with which the International Financial Reporting Board, which is named later, the standard has been set, and accordingly it is accepted worldwide. Now let us also understand it from Indian perspective. We have seen it from global perspective. Now Indian perspective, Institute of Chartered Accountant of India, which is the member of IASC, set up a board in April 1977. So Indian Accounting Standard Committee, which set up this board, Accounting Standard Board ISB, this board was to work upon developing the standards for companies at national level in consultation with various institutions, various stakeholders, uh, firms, companies, and accordingly they have come up with the standards to be implemented in India. So that is why it is uh, Accounting Standard Board ISB, which has come up. Now, the objective of developing this, which is to a larger extent by now is clear, to bring the uniformity in accounting practices and to develop the draft of accounting standards. So this draft was made and it was again submitted to ICAI, keeping in view the business environment, legal provisions, because a lot of legal provisions are there, after discussion with stakeholders such as government, industry, federations, etc. Now, what they have come up with. Now, let us have this understanding thoroughly, because I would expect all of you to pay attention to this part alongside the subsequent pages. So there are three sets of accounting standards for financial statements in India. Three categories. So AS issued accounting standard issued by ICAI, which is Institute of Chartered Accountancy of India. That is one. ICAI board, ICAI institute, which has developed an accounting standard which is to be followed by or applied to non-corporate enterprises like firms, small enterprises. There is also a capping given that if you fall into a category of uh, revenue or net worth less than this, you have to follow this one. Not mandatory to go ahead with follow the higher one. AS issued by Companies Act 2013. Now this is also issued by Institute of Chartered Accountancy of India. Then this is AS accounting standard issued by Companies Act 2013, and this has been named as Ind-AS, IND-AS, as it is mentioned here. Now, who has to follow this standard? So it is the listed companies whose net worth is 250 crore. Listed company means companies whose shares are being bought and sold in Indian stock market, NSE and BSE. So they are called listed company. The company shares are being bought and sold in the stock market. Now net worth is 250 crore or above. So if a company falls into this category, they are compulsorily to follow Ind-AS, which is issued by Companies Act 2013. Now there is a third one. AS issued by Companies Act 2013, that is also named as AS. This is other companies not listed and not worth less than 250 crore but optional to follow Ind-AS. They have the option to follow this one. Yet if they do not follow, they only follow the other companies, so they are also accounting standard, but applied for or applicable for companies which are less than 250 crore. Now, as an AS, Ind-AS, both are notified by the Ministry of Corporate Affairs and Government of India. So this is what is to be followed, which do not happen to fall into this category, but little lesser than 250 crore, they follow this, and firms and enterprises, they follow this. Accounting standard issued by ICAI. Now let us see the next one. Meaning of accounting standard. By and large, we have covered it, but still, let a set of guidelines based on generally accepted accounting principles. So generally, generally accepted accounting principles. These are rules, procedures relating to measurement in terms of financial value, recognition, treatment of transactions, presentation, and disclosure of accounting transactions. So accounting standards gives us very, these are the few things which are listed here. They are generally accepted principles. Rules are written there, the way it has to be executed, procedures, then recognition, treatment, presentation, and disclosure of accounting transactions. Everything it covers, and accordingly, the companies who fall into the category of accounting standard, they have to, or the firms, they have to follow this. Nature of accounting standard, it is guidelines, uniformity, so that everyone follows the same. Then comes, it is prepared keeping in view business standard and law of the country, very important. It is mandatory in nature, compulsorily to be followed. Every firm has to, if they happen to fall into this category, they need to get their accounting uh, certified by a certified chartered accountant, which is called audit. Flexible but suitable disclosure, example, depreciation method. So there is no hard and fast rule to follow a particular method of depreciation. It is the choice of the company, but it has to disclose in its report or a statement that why it has followed this particular method, or if at all it has followed, it has to be continued for consecutively. It should not be such that the first year one method, second year other method, third year another method. So it should be, there should be consistency. Now let us see concept of accounting and standards. It prescribes accounting rules and procedures for recognition, measurement, treatment. Almost by and large, it is the same concepts or the objective with which it is started. To minimize the diverse accounting, which we have already seen, promote better understanding so that there is uniformity of the statement, which results into better understanding of the accounting statement, to make understand significant accounting policies adopted and applied, then facilitating meaningful comparison of financial statements. So A company can be compared with B company can be compared with C company, because investors, they always look out for the companies which are doing good, and they take their decision of going ahead with the investment of that particular company based upon the accounting statements which are published by such companies. Accordingly, they happen to do the investments. So flowing into the company or organization also depends upon the accounting statement and its reliability basis. So that is why it is very important that companies have to pay, or they are paying due attention to the accounting information which they are going to publish. Enhancing reliability of financial statement. So it has to be reliable. So this is we are talking about accounting standard. Now, utility of accounting, what is the usefulness? Utility means usefulness. So it provides norms of preparation of financial statement, ensures uniformity, which is if it is uniform, then easily comparable. It creates confidence if it is audited, verified. So it creates reliability, or confidence or reliability. It helps auditors in auditing the accounts. So base auditors also certify the accounts basis the reports which are submitted by the organization to the auditor. And if entries are properly made, it eases the process of auditing and finally submitting the audited report. So limitations also, nothing is free from limitations. So we'll see this limitation of accounting standard accounting are man-made. So there is always possibility of human intervention depending upon his or her interest. So he may do so, but with proper supervision and observation, it can be ignored it can be eliminated to a larger extent. Subject to change as per change in business environment or laws. So as we though largely it is as per the policy set and accordingly it is followed. But yes, if there is a law which comes into the picture and does any sort of improvisation or deletion, then there is no other uh, law or no other authority who can challenge that. That needs to be incorporated as per the law. Now, the next one, International Financial Reporting Standard. We have already seen accounting standards, one which is prepared by Institute of Chartered Accountants of India. Then second one, we have also seen the International Accounting Standard, what is followed at the international level, how it came into existence, what was the reason for it to come up, and we have seen the premise which made the authorities to come up with international accounting standards. So that is what International Financial Reporting Standard. Understanding about IFRS, set of accounting standards developed by International Accounting Standard Board. Then these are the principles based accounting standards. So we have to understand this. The one which is suggested by IFRS, it is principle based accounting standard. So rule based and principle based, there are two ways. The rule, there is a standard rule and there should not be any deviation. Principle, a thoughtfulness as per some principle or practices. Accordingly, the accounting standard is maintained. So as per IFRS, principle based accounting standard is maintained. What is the objective? To develop a single set of high quality, transparent, understandable, enforceable, global accounting. So that is the objective. We have already seen, though these terms may be specific, but by and large, the larger objective is to ease in the process of global trade, global flow of funds, and that can only be done through the better understanding of the language called accounting language. Meaning of accounting standards. So set of guidelines we have already seen. Nature of accounting standards. So these are the nature. IFRS based financial statements. So a statement of financial position, comprehensive income, statement of so IFRS based financial statement which is prepared by IFRS. So what all it covers? So it covers the financial position of the organization, which is trading account, profit and loss account, and balance sheet, which is financial, though the formats are defined, are framed by IFRS. However, by and large, it gives us the information about the financial position of the company. Statement of comprehensive income. So it also tells us the income of the company and what all sources through which income has been generated. Then statement of changes in equity, whether what is the change that has been incorporated in equity. Is it through preferential share or is it through equity share? How the funds, how the equity proportion is prevalent? All these things which comes up as an information, as a statement to the user, so that they do not have any ambiguity with regard to understanding the financial health of the company. Statement of changes in equity. Okay, cash flow. How is the cash health of the organization? Notes and significant accounting policies. So this much of details are submitted for any particular company as per standards set by IFRS. And if such detailed statement is presented, so anything, and if it gets certified, obviously the report will be more reliable, authentic, acceptable, understandable. Nature of accounting standards. So it is a guidelines which is given there. Uniformity, prepared, keeping business standard and law of the country. It is mandatory in nature, flexible with. So by and large, if you look at the objective, the nature, the benefits are same in both the scenario, be it national level standard or international level standard. Now, Indian accounting standard, we have seen to a certain extent. Let us understand a bit more. India decided to prepare its own accounting standard. It had the option either to go ahead and exactly follow as per IFRS or have its own. So it thought of going ahead with its own, but in sync with the broader guidelines of IFRS or the norms which are or standards which are prevalent in IFRS. Now, difference between Indian accounting standard, which is Ind-AS, and accounting standard, though I have touched upon, but let's be a little more precise. So Ind-AS are principle based and are AS, which is accounting standard, they are rule based. Now let's understand it a bit more. So let's say preferential share, which is their preferential share, equity share. So they are the category types of shares which are issued by the company in order to raise fund for the company. Now, if the preferential share is issued and it is usually put up in balance sheet. So there, as per the AS, which is rule based, share is a capital. So under the heading capital, preferential share is supposed to be put up. But the nature of preferential share is such that there is a fixed return to be given to the preferential share. They have the preferential right over equity share, and all it has to be refunded back to them if there is a norm returnable preferential share. So considering all this, they have priorities. They are not actually like the equity shareholder or real owners of the company. Who happens to be the real owners of the company? So preferential shareholders, they have all the rights. Really, if you compare it from equity shareholder, therefore, these preferential shareholders are principally not to be treated as capital holders or share, not to be put up in under the head capital. Rather, they are to be treated as an outside liability, because the fund there is some preferential right given to them, so they are not considered as real owner of the company. So this is very important to understand. As per AS accounting standards, if we see that in Ind-AS, which is a principle based, rule says it has to be put up in share under share capital, but principle, by following the logic, its nature is not to fall into the head share capital, has to be put up as an outside liability. Now, Ind-AS involves the second one. Ind-AS involves fair value concept, whereas uh, accounting standards are based on historical cost concept. Now, this is also important. So, AS, which is based on fair value. What is fair value? And what is the historical cost? Now, if we talk about historical cost, we must have uh, understood earlier as well. I told you that depreciation, which is charged on fixed assets due to its continuous use or due to lapse of time. So, the standard which is set is we have to be conservative principle says that we have to keep the historical cost minus depreciation. Okay, historical cost. So if supposingly a building, plant was purchased at 1 lakh rupees, now first year there will be, if it is 10% depreciation, so 10,000 rupees of depreciation. Then next year 90,000 minus 10% of this 90,000, which is 9,000, and so on. So there is one method which is called written down value method. This is written down value method. The other one is straight line method. So companies follow accordingly. Now what it says that if it is fair value or historical cost, now there may be a situation that the cost of the asset in the market because of technological advancement might have gone substantially low. But since we are keeping it at historical cost and standard percentage is getting deducted year on year, so some it is important that we need to also consider the fact which is fair value, not necessarily or not rigidly following the rules, or which is prevalent based on historical cost. Ind-AS involves fair value concept which is written here, whereas it maintains historical cost concept. Now, financial assets at fair value, while others may be. Now, there is also an exception. What it says that in days that we can keep the non-financial assets such as plant, building, machinery, land. So these can be considered as on the basis of historical cost, but securities or financial investments that the companies have done, these are not to be treated as per the way we treat historical cost. This should not be treated as historical cost. In fact, if, for example, if a particular investment which was done at, let's say, 1 lakh rupees, 1 lakh, and if at the end of the year its value has gone up to 1,50,000, market value has gone up to 1,50,000. So the account uh, standard, which is Ind AS, what it tells that this 50,000 rupees, which is the profit, should be treated as profit for the current year and should not be let aside, uh, should not remain untreated because of historical cost factor. So it has to be treated with fair value. If there is an increase in the value of investment, then that investment is a profit and it is to be treated in the book account. So let us see the next part. So here, I hope, let me summarize the whole thing that we have covered. So we have seen the accounting standards, not only at international level, the way it is prevalent, then what all incorporations we did, what are the three types or three ways we incorporate our accounting standard. One which is done by our for the firms, which is called as accounting standard. The other one which is followed by the corporates who have turnover 250 crore and above. So they follow the other one, which is AS accounting standard. And then the third category we have seen, which is less than 250 crore, they also have to follow the accounting standard. And the objective of this is to help the people who have stake in the company or who is willing to develop stake in the company. They should be able to take decision on the basis of the transparent information they get onto the in the books of account, because they abide the norms which are set and therefore reliable. In order to develop the reliability and confidence of the investor or stakeholders, such developments are done, and the language which accountancy speaks is nothing but the language of the business. If it is understood by the investors or the stakeholders, they may come up and do the investment. So this becomes easier for the company to raise fund and continue and grow its operations, not only nationally but internationally as well. So I thank you all for being here listening to me. I would expect you to like, if you have liked the content which I have tried to share with you, the subscribe, so that the various other videos which I'm going to come up with, you get notification about it. Share it to other students in your locality or school so that they also happen to get this information. And most importantly, would expect you to share your comments. How is that you have liked it? What is that you have learned from here? In case if you happen to write, it would be a great sense of satisfaction for me, so that I can furthermore incorporate your suggestions if at all it is there, or try to improvise the way you understand it better. And this all I can learn through the comments that you make. I expect you all do that. So we'll take up the next chapter in next class, which is basis of accounting. So I believe if all of you have understood this, a little technical, but certainly of great help in broadening our thought process, that it is not simply entering things in the books of account. Lot of governing bodies and standards which have been set in order to come up to the final stage of financial health of the organization. Thank you so very much. Wonderful talking to you all, and expect you prepare well for the upcoming exam. Thank you so much.